Should your rental property go in an LLC? It can, it doesn't have to, but if you do, there's some things that you have to know about and steer clear from. For those of you that don't know, my name is Matt and I run a CPA firm called TrueBooks that specializes in tax and accounting for real estate investors. I myself am a real estate investor, so this is speaking from experience. Now, I'll preface this video with I'm a CPA, which is a certified public accountant. I am not a licensed attorney. So this video is really going to touch on the tax consequences or pros and cons of having a rental property in an LLC, but I'll also, again, share some tips as to what I've heard in the industry. All right, so what are we even talking about? When you buy a rental property, a lot of the times people are thinking that they should put it in an LLC, which is a limited liability company. Now, in my opinion, there's no right answer to this, and most of the time it's going to come down to your risk tolerance as to why or when you should put a rental property in an LLC. The first thing that I always get asked is, well, if I'm going to put a rental property in an LLC, where should I set up the LLC? Which state? And from what I've heard in the past and what I see used in practice most commonly is you should focus on getting an LLC in the state where the property is. So for context, I live in Las Vegas, Nevada, and let's say that I have a property in Texas. I shouldn't typically get an LLC in Nevada to own the property that is in Texas. And the reason being, you are likely going to get more protection from an LLC if you have the LLC set up in the state where the property is located. Because ideally, if any suit were to happen or someone would bring a claim against you, it's going to happen where that property is. And so ideally, you would want those rules and the protections of that state. So that's why you would typically set up the LLC in that state where the rental property itself is. Now, that doesn't mean that you can't have a holding company in Wyoming or Delaware and things like that that could maybe own the LLC that owns the property. But for the LLC that owns the actual property, you typically want to do that in the state where the property is. Now let's talk about some pros and some cons. And the first thing that I'll start with are the pros. And the major pro here is that you're obviously separating the liability between you yourself or your other assets and this rental property. And this is a good thing because ideally you don't want somebody to have, say, a slip and fall at the rental property that you own and then come and sue you personally for your personal assets. So again, this LLC is there to mainly provide as a protection and separate the other assets that you own with the rental property that was placed inside this LLC. And that's really the only pro here that we see from the tax side of things. Again, that liability protection. This is purely a liability play. This is not a tax play. Whether you own the property in an LLC or not, it's not going to hurt or help you tax-wise. Now, to talk about some of the cons, here is what I see and why I determine these to be cons is because I see this play out in practice. And the first con is you obviously have increased costs and additional admin functions when having a property owned by an LLC. What do I mean by this? Well, you have the admin time and costs of setting up the actual LLC. And then you have the renewals that come up every year. For context, I'm in Nevada. An LLC here costs $425, and then in year 2, it's gonna cost you $300 every year to renew. So just having that on your calendar or having that as a function or task that somebody on your team has to take care of sometimes can get overlooked. And so obviously if you have a property that is owned by an LLC, you wanna make sure that you're renewing that entity every year and not let it lapse and dissolve. The next con is going to be a potential due on sale clause. You've probably heard of this, but when you went and bought that rental property, you likely bought that rental property under your individual name. So what it's going to take for you to put that property in an LLC, you're not really gonna sell that property to the LLC, right? You're going to transfer that via a quitclaim process probably and put the name of that LLC on title for that property. And what could happen if you read the mortgage documents that you have, if you have a mortgage on this property, is a potential due on sale clause. Basically meaning that if you were to transfer ownership of this property while you have a loan out on that property with the bank could call that loan due because now you've technically exchanged the interest of this property without letting them know, when in reality, the mortgage is with you, but now Bob owns the property. So there could be a problem there. So we get asked all the time is, hey, what's the risk of the due on sale clause? And I have to say, of my 8 to 10 years of being in this business, I have never seen or heard of a due on sale clause happening to any of my clients or their friends or family. Not to say that this cannot happen, but it's very unlikely. Because if you think about it from the bank's point of view, as long as you're making that mortgage payment, they ideally should be okay. And the last con that I want to talk about isn't so much of a con, but I see it as a con with most clients because they don't usually follow the rules the way that they should. And this is keeping separate books and records. So anytime you have a business or you have a rental property or you have an activity, you want to give it its own attention when it comes to its own books and records. Its proper accounting, the income, the expenses, the receipts, the tracking. You want to have all of that documented separately as a standalone entity, which this is. It's a separate LLC. And the problem that I see is somebody will buy a rental property, then they will go quick claim their name off of the deed and put the LLC name on the deed. So now it's like the LLC owns the property, but the mortgage is held by them at the bank. Okay, so far. But the problem is now that this property is in the LLC, they'll keep the client themselves receiving the rents and paying the expenses from their personal bank account. And that is a major no-no. Because my understanding and from my experience is if you're not using the LLC as a separate legal entity, why at all would it give you the protection as such if you're not treating it like that? So for context, if you're commingling funds and using your personal bank accounts to manage this LLC and not really using the LLC as a separate standalone entity, you now open yourself up to increased risk that if somebody were to sue this entity, they likely could maybe come after your personal assets because you're not showing any sort of separation of business there. You're commingling things. So this is what I see most of the time in practice not being followed. And this is where it makes me think as a professional, hey, client, you're better off not putting this property in the LLC, even though you want the protections, because you're not going to use the LLC for what it really is, which is a separate legal entity. So as long as you're going to put this property in the LLC and you're going to treat it as such with separate books and records, then it's probably not a bad idea. And I know this was fairly short, but that's really it. When it comes to the pros, hey, it's liability protection 100%. And when it comes to the cons, it's my job to see and let you guys know of where I see people go wrong most of the time. And I'll tell you what, it mainly is with that books and records piece. It's great to have the liability protection, which is why I said this is really a risk tolerance issue at the beginning. Because let's say that you have 10 rental properties. We get asked all the time, should I put one rental property in one LLC? And then think about that, have 10 LLCs with one property in each of them. Could you do that? Yes. But is that the right answer? No, not necessarily. It's very much a risk tolerance issue. If you wanted to start to separate out your portfolio like that, what I would probably focus on is if you have 5 properties in Texas, 5 properties in Wisconsin, maybe you put 5 properties in the one LLC in Texas, 5 properties in the other LLC in Wisconsin. So it's likely you should structure it in some sort of way like that by state. Another way to look at it is, let's say that I have 10 properties here in Nevada, and 2 of them are in a bad area and 8 of them are in an okay area. Maybe I just carve out the 2 and put those in a separate LLC because it's most likely that any sort of problem that arises would happen with those 2, and I don't want to expose my other properties to those potential problems. Great. Maybe I just put the 2 that are lower performers in the one LLC and have the 8 ride out in another. And if you find yourself in this situation where you have rental properties and you're trying to evaluate your portfolio and determine where things should go, it's likely time that you should talk to an estate attorney. Yes, I'm a CPA up here giving you my thoughts and tips on this, and that's because I have clients that have dealt with these same issues, and I see who's doing it right and I see who's kind of doing it wrong. So my thoughts are always going to be from the tax perspective. Hey, make sure that you're keeping separate numbers. But the legality of it as to where the LLC should be, who should be on title for the LLC, should it be member or manager managed, all those different questions. I can give you general tips as a CPA and what I see in best practice, but 100% you should meet with an attorney to talk about your specific situation. Remember, everything in tax and accounting and legal when it comes to you is very fact and circumstantial around your specific situation. So because you come on here and see me talk about something and think that it sounds like your situation, you definitely need to share every detail with whatever provider it is that you're working with so they can give you the best, most tailored advice to your situation. And as always, I'm here to give you my thoughts and experience and tips on the tax and accounting matters when it comes to real estate. Like I said, my firm specializes in helping real estate investors with their taxes and the accounting and bookkeeping and things like that. And like I said, as an investor myself, I have a heavy interest in this as well. And so anything here that you maybe feel like I didn't touch on or want me to share more on, feel free to drop it in the comments, and I'll see you on the next one.